Okay, I'm starting the broadcast right now. Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and sponsored by RHB. And today we are very excited because we're going to talk about a very interesting topic, which is trading BMD futures for a living. Critical lessons you need to know to get started. Okay, so welcome everybody to these sessions. How are you guys doing?
Very good.
Very good.
All right. So we have our panelists here on the line right now. So for all our attendees today, if you're doing okay and ready for this session, right? Type ready. Okay, let me know if you're ready for this session. Oh, okay, cool. Thank you so much. Wow, great response we have. Now today we're going to talk about how we can trade BMD futures for a living. As you know, there are many professional traders who choose to trade futures for a living. In fact, among my circle of friends, right, many whom are traders, right, are really trading futures for a living. So today we're going to explore what are things you need to learn before you get started. All right. So we have a few guests on our webinar today. We'll first start the session with Vincent. Then after that, followed by David. Then we'll tell you how you can win our 3 touch and go e-wallet reload pin worth 100 ringgit. Okay, so stay tuned until the end of the session, and we will review to you how you can be one of the 3 lucky persons to win this touch and go e-wallet reload pin worth 100 ringgit each. Huh? All right. So now, before we begin, just a usual disclaimer, which is whatever we share on this webinar is only for educational purpose. So in no way that I give any recommendation to buy or sell anything. All right. So you are solely responsible for all your investment decisions. Now, allow me to introduce our first guest speaker, and he's none other than Mr. Vincent Chin. Okay, now Vincent Chin is the Associate Director for RHB IB Futures and Commodities. And he is currently the unit head for corporate sales and marketing. Now, formerly a fund manager, Vincent has over 20 years of experience in the equities, futures, and derivatives related industry. And during his career, he has designed trading models and strategies to cater for various markets. So without further ado, let me hand over the session to Vincent. All right.
Okay, thank you, Shane. Let me share my screen.
All right. Wow, some of you here say ready to make money. Okay, awesome. Yeah. All right.
Okay.
Vincent can see your screen.
Okay, thank you very much, Shane, for having us. So I wish good evening to all our participants. Glad you can join us for this evening. You are in good company, as many of us are here to listen to a very interesting topic, trading BMD futures for a living, by a renowned speaker in Mr. David Low. So definitely we are all very excited to wanting to listen to him, and hopefully it can help some of us to kick off our trading journey. If you have been looking for an investment bank to cater for your futures trading requirement, look no further, as RHB is one of the top investment banks in the country, with the largest number of branches whereby we can serve you. You will also be assured of good quality service, and also access to all our training programs to help you in your trading journey. Today is as such that we are collaborating with Bursa Malaysia and LifeChamp to bring you this event. So do bear with me as I will run you through what RHB has to offer. So we can see this is a web page from our RHB TradeSmart. You will be able to find this page when you go to the home page and allow the slides to run. This is to showcase that we are serious about ensuring that those who come our way will benefit from all the webinars conducted and organized by us. We have both internal and also external speakers to speak about many interesting topics, which will cater from beginners to advanced listeners. So this is the list of webinars that are coming soon. It's all scheduled. If you see the top here, the top part, this is where you can actually find the webinars in this particular link. So, Shane also will be sharing, through the chat, this particular link if you wish to join our webinars. Okay, as you all can see in this particular calendar, those in green shades, those are all our webinar dates. There are many of them that you can pick and choose and put in your schedule, and so that you can join us at your convenience. So in this particular slide, you can see that RHB Investment Bank, we do have quite a bit of a list, of products that we carry here. So we try as much as possible to provide as many products so that you will be spoiled for choice in the number of markets you can trade and also invest in. Okay, this is not supposed to happen, but okay. Next slide here. And okay, this is basically, a snapshot of our 3 trading platforms, which are available to all our clients. And it caters from the needs of beginners, intermediate, and also our professional clients. The features of the individual platforms are displayed clearly, and clients will have a good overview of what they are getting from each of the platforms. This page also can be found in the RHB TradeSmart webpage. If you look for the futures trading platform, you will be able to get to this page and you can have a good look at it. So obviously, in this particular page, we can see also, the conditions listed out. If you choose, if you choose a particular platform. Basically, I think wish to highlight again the AES GTS, which is our platform for beginners, right? It is free, and for QST, a minimum of 20 lots a month is a condition for you to get it free. And then for CQG, which is the professional platform, is 100 lots a month. So in this next slide, you'll be wondering, what are these lists of names here? These are basically third-party providers. And we also want to cater for those who have moved along your trading journey, and then during that journey, you have become more sophisticated in your requirement, and also your trading needs are more demanding. So in RHB, what we do is that we provide API connections to all these listed third-party external application. And usually, this is to facilitate algo trading requirement, and also for traders who have, along the way, designed more complex strategies. So this is basically, the list whereby we can connect you through the APIs. So what next? Of course, we hope that you will sign up as a client. If you are looking for a investment bank to open an account with, and all these propositions that I have basically shown you are our strengths. How you can do it, basically, if you do want to open an account, you can leave a feedback with all your information at the end of the webinar event, or you can, after you have basically list down all your information, we will share this information to our nearest futures broker, and he or she will be contacting you to help you through the account opening process. Otherwise, you can also get in touch with the business development team or me in order to help you through the process. So this is our email address. And I want to thank you again for this opportunity to be able to speak to all of you. I hope all of you will have a very exciting evening, and hopefully you will be able to learn much from what is to be shared. So without further ado, let me pass back our time to Shane, who is our moderator for this event. So Shane, over to you. Thank you very much.
Okay, thank you so much, Vincent. Let me share my screen here. All right, so there we go for Mr. Vincent Chin, the Associate Director of RHB Investment Bank. So, ladies and gentlemen, if you not yet have a futures trading account and would like to open one, then you should consider RHB, because RHB is one of the top brokers in the industry to serve the retail clients. Okay, and then they also have different trading platforms for different levels of retail clients, such as beginners, intermediate, and professionals. So you can definitely consider RHB lah. So. Coming up next is our next session, which is the main topic for today, which is trading BMD for living. So let me introduce the speaker for today's session, which is Mr. David Low. Now, David is a trader and managing partner of Exmodius Trading Group PLT, a consultancy firm specializing in bespoke trading strategies and coaching for private and corporate clients in the equity commodity derivative markets. He has 24 years of experience in Malaysia's listed derivative industry. Before starting his own consultancy, David held leadership positions in futures brokering divisions of major investment banks in Malaysia. He served as the president of the Malaysian Futures Broker Association between 2018 and 2019. As a fervent believer in trader education, David has spoken in seminars and workshops to over 5,000 retail traders on trading Bursa Malaysia derivatives, as well as the CME, SGX, and Hong Kong exchange markets. So his work includes live market trading sessions and webinars. So we are very honored to have you in the house today, David.
Thank you, Shane.
All right, so let me hand over the session to you.
Okay, just let me share my screen first. And first and foremost, thanks, Shane, for that wonderful introduction. And also thanks, Vincent, for that quick introduction there as well just now. Okay, I hope you can see my screen, right? Okay, so the topic tonight, trading BMD futures for living. Critical lessons you need to know before you need to get started. Okay, this is a very important subject, but first and foremost, thank you everybody for joining us in this evening's webinar. Hope everybody is staying safe and staying healthy. Okay, this is a very, very important subject. But before we get on to the subject, I'd just like to know, we've got like almost 300 over people locked on to this session. Just to get a feel of who we have in our audience and participants today, I'm going to ask Shane to help me put up a poll. There are 3 questions there. So if you can respond, I appreciate it so that I can get to know who are the people out there today, right? So there are 3 questions there First is, do you trade BMD Futures, palm oil, and FKLI? Or do you trade stocks only, Bursa stocks only? And are you a trading full-time either stocks, futures, both? Do put your responses there so we can get to know you a little bit better.
Yes, the law has been launched, and then we are seeing that over 30% of people have already completed the poll.
Fantastic. Thank
Yeah,
you for the
just
quick
wait maybe
response.
half a minute more so that we can know all of you better, okay? Okay, thank you so much for all your participation in the poll. So let me just end the poll and then share the results. Okay.
Boom. Yes.
Okay.
Okay.
You are
Very
seeing the result,
interesting.
right?
Yes, we have a third of our people here already trading the futures. Fantastic. And we have another 68% not yet. Fantastic as well. So we have a lot of people who can still participate. A lot of people are trading stocks as well, 65% of you. Okay, very good. 35% not trading stocks. Okay, and full-time, wow, okay, we do have quite a number of people doing full-time, especially in stock, 1/4. Fantastic. And 15% of you are doing both futures and stocks. Okay, thank you for the response. That's a fantastic insight of who are the people here. So we have quite a big group of people doing it full-time as well, right? For stocks, one 1/4 is quite a huge number of people. Out of the 300 people, we have like 60, 70 people who actually trade stocks for a living. That's amazing. So I hope you're doing well this year as well. Okay, and those who are trading futures are both 15%. I saw this now. I hope you are doing well. Okay. Now, if you're not doing well, there may be some reasons that you are not doing well. Hopefully, we can get some insights on what we can do to make us trading more successful. Now, what I want to do with you today is a little bit different, okay? Although we're talking about trading BMD futures, right? So this session will not about showing you a BMD chart and showing you where to buy and where to sell. And I think there are even more critical lessons that you need to know, okay? So we saw a huge list just now in the RHB website where there are a lot of classes on how to trade BMD, how to get started trading BMD. Okay, but I want to share with you some very important lessons I've learned myself when I'm trading, because I'm a full-time trader for CPO as well. That's what I do every day, right? So my business of consulting is something on the side, but actually I'm a full-time trader, right? So I'm sharing with you some of the experiences. I'm sharing you some of those lessons I've learned the hard way as well. Okay, so hopefully you don't need to learn the hard way. Okay, hard way, that means lose money on, okay, and very painful one, right? So some of you have to go through that. Unfortunately, it's part of the paying for the lessons you have to learn. But hopefully, the lessons I'm going to share with you today will lessen the pain and make your journey towards trading profitably a better journey for you. All right, so we will be taking questions, okay, and please put in your questions. I saw some questions coming up already, and I'll take those questions at the end of the session together with Vincent and Shin. Okay, so let's get on with our session tonight. All right, so we've got that disclaimer. You've seen that. Okay, just a quick 3 seconds. 3, 2, 1. Okay, you speed read. A lot of people know how to speed read disclaimers these days. Okay, let's go down. Okay, this is now. Okay, this is what I'm going to share with you tonight. All right, we are going to talk about. I'm going to show you what is the hype and what's the reality of trading. Okay, you will see a lot of people marketing on the on YouTube's and Facebook's, a lot of promises, okay, on how you can make it, reach trading whatever, okay, trading futures, trading stocks, everybody. I think last year, if you were ever on the internet, you will see so many of this, and you are on YouTube, so many of this what do you call it, advertising keep disturbing you halfway through your YouTube channel, telling you how you can sign up for their trading and all that, right? So a lot of hype lah, okay, a lot of hype, maybe some reality lah, but we will see about what those hype, okay? So you try to separate the hype and the reality of trading, okay? And then I want to go to you to talk about mindset, methodology, especially capitalization and risk. These are very, very important concepts that you need to understand. Okay, I will show you how, okay, to know that the method that you're trading is going to be profitable or not. Okay, you may spend years doing trading a system, but in the end, never knowing that it's going to fail. And then 5 years down the road, it fails. Then you spend like 5 years of your life experimenting with something that you should have known at the start whether it can fail or not. Okay, so that's a very big and very important question. Your system boleh guna tak boleh guna mea. Okay, if tak boleh guna one, don't waste time. No, either that or you tweak a system that can make it work in the long term. Right. So we don't want to spend a lot of time trading a system that in the end is going to crash on us. Right. So those are the things that I will show you, how to have a system that doesn't crash on you, how to know the risk even before you try. You know the system tak boleh guna. Okay, so separating the hype from the reality also is be able to analyze those systems that people sell. Okay, they say the system is so good, I have this very high percentage of win, but in the end, when you measure it properly, it's gonna fail. Okay, so that's very important as well when you are, doing your education to learn about trading systems. Okay, so we're gonna cover that at length, and at the end, of course, we'll cover some of those professional trader setups, how my trader setup will look like, and how you can set up trading if you're doing it seriously. Okay, so this session is about serious trading. No my mind one. You know, my mind one, you can listen, have some fun. Okay, but this is serious stuff. Okay, so I want to share with you something which is, even though Shane has done a few sessions to me, he will see that a lot of things that I shared tonight he has never seen before. Okay, so that's something I promised Brusa and also promised Shane that I will do for you guys tonight. Okay, so thank you, Brusa, and thank you, RHB, for the opportunity to do that. So let's get on with it. Okay, this is the hype lah. You always get when trading, how to sack your boss and trade full time. This one, I think that this kind of headlines come to you a lot of time on the internet. A lot of books also written on how to sack your boss and trade full time. Is it smart or is it stupid? It depends. Okay, it depends. It is not. I'm not saying that you cannot sack your boss and trade full time. You can. Just don't crawl back to your boss after 3 months. Okay, so if you're not good and you sack your boss and you then trade full time and you fail, then problem. Okay, so it won't be stupid if you didn't know what you were doing, right? Millions of dollars can be made just investing a few hours a day. Right. Okay. Very good. This could be right, could be wrong as well. If you invest a few hours per day and do that for 7 years, that's a lot of time you invested as well. So hopefully you learn a lot of things investing a few hours per day. And if you are good, of course, the opportunity to make millions of dollars is possible. Okay. If you are good. Insider secrets to making it big in trading. Okay. A lot of people say they are only guys who have the secrets. Okay, a lot of these insiders are also in jail. Okay, because SE go for them. Okay, so you better be knowing what you are listening to. Insider secrets. Okay, a lot of insider secrets. They sell. Okay, I don't know why they sell insider secrets, because if it's so secret, you don't sell, because then you use it for yourself. Okay, so insider secrets that only the audience or those who buy the system use, but they themselves don't use. So a lot of times systems are like that. So you have to be very careful of all these promises. Okay, anyone can become a day trader instantly. I think last year when there was this huge boom in stocks in America and all over the world, everybody wanted to be a day trader. Okay, and the promise that you can instantly become a day trader. You can, okay, but doesn't mean that you win. Okay, day trader is just putting an order in on the start of the day and getting out on the end of the day. Okay, the secret is doing it profitably. Right. So all these promises, it can be smart, it can be stupid. Okay, but the reality is, okay, what is the reality? The reality is, when it comes to trading, it's a lot of hard work. Okay, but before I get to this one slide to talk about what you don't know can actually kill you. And last year, sadly, right? Last year you heard about this case. This guy Alex Kearns, 20 years old, a student in university, killed himself. Okay, he joined, that broking firm. What was that? That famous broking firm that offered free. That was Robinhood, right? So he traded. He actually joined Robinhood during before he started university. In his when he was a teenager, traded a few stocks. Okay, and last year he had some savings, $5,000, which his grandma and grandpa gave him. Right, so he traded stocks, and then Robinhood gave him the opportunity to trade options, okay, stock options and all that. So he had a position that at one of those days in June last year, there was a he believed his platform showed him he lost $750,000. Okay, for a guy in university who had only 5,000 capital, losing $750,000 was a big thing to him. Okay, so he desperately called the what do you call that, the help desk. Okay, and Robinhood don't charge commission. Okay, free things, cheap things, they don't have support on. They have a robot on the other side. So this guy called 3 times trying to solve his problem because he already got this margin call or whatever. For immediately he need to put in 170,000 money he didn't have. 3 times he tried, he couldn't. He was desperate. He killed himself. Right, 20 years old, killed himself. Right. So the next day, sheriff come to his dad's house, say, Alex is dead. Okay. And after that, after he died, one day after that, the Robinhood came out with the automated email suggesting that the trade had been resolved and he didn't owe any money. So he died for nothing. Right. So what you don't know can kill you, So all the hype about trading and you don't know what you're doing actually can kill you. And so it's very important to know what you're doing. That's the message of this particular slide. Okay. So the reality of trading, successful trading is a process. Okay. It cannot be done overnight. Okay, just like you cannot be an overnight success. You want to start a business. Okay, the trading is actually a business, a real business. Okay, and when it comes to trading, there are 3 things that you need to have in the formula. Okay, trading methodology. Of course, you need to have a method with an edge. Okay, and this is one thing that I will want to really emphasize afterwards. A methodology with an edge. No edge, sure lose one. Okay, long-term sure lose. So you need to know how to have, and you need to know how to measure whether your method has an edge. Okay, if it doesn't have an edge, then you probably have to tweak that system, or else you don't trade it with real money. You're just basically putting in money and you don't know whether you succeed in the end. Okay. Number 2, of course, you need to have robust money management, and that's a very, very important part of trading. And lastly, the correct mindset. Okay, but I will stress starting with a method with the edge, and we'll talk about that. Okay, so to be very successful, you not only need to have the knowledge and skills. Okay, you also need the work and dedication. Okay, a lot of people who succeed in business, okay, any business, I don't talk about trading. Okay, there is a lot of what do you call that, work and dedication to be successful. Okay, and don't think that in trading it's a shortcut. Okay, that's like a fast success. I don't need to put in the work. I don't need to have the knowledge. I don't need to have the skills. I think you're basically just fooling yourself. Okay, or else you're just basically taking a gamble. Okay, and a lot of you are stock traders. Last year, I know some of you probably even started last year. Okay, and these are very familiar scenarios to me because I've been in this business for 25 years, 26 years. I've seen a lot. I've been through that 1993 bull market. The first time I traded as well. That's where I learned how to trade, and the first time I learned how to burn. Okay, burn until the bones, right? So burn until nothing. Actually, burn until nothing. Right. So a lot of you may have started, okay, last year, okay, and probably made a lot of money as well. A lot of my friends made money, okay, and friends who never traded stocks before in their life, they made a lot of money, okay. But this year is a very different story. Okay, so I hope those who have started last year are able to maintain their profit and hold on to it and join this seminar to learn more. Okay, if not, even if you had a bad situation or you didn't really succeed, it's time to start learning as well. That's like a wake-up call that did it to me as well in 1993, 1994. It's a wake-up call. I needed to learn more about trading. Okay, so don't give up and don't what do you call that? Be disappointed with that. Okay, so the things that we want to learn today is you want to learn things that successful traders do. Okay, and of course, successful traders and professional traders. Okay, and last one thing I will talk about is also the adequate capital. Okay, if you want to do full-time trading, it's very different from doing it on a part-time basis. So we're going to compare all those things and also answer the question whether part-time trading better or full-time trading better. Is full-time trading always better than part-time? Okay, we're going to answer that question as well. All right, so let's move on. So making mistakes in the market, can be very expensive, right? Okay, I've gone through that. Some of you may have gone through that. Hopefully not too many make very expensive mistakes. I've made a lot of expensive mistakes in the market. It's good that I can survive until today. I'm still in the business, okay? But take it from Warren Buffett, this guy, the best stock investor in the world, okay, ever. He said it's good to learn from your mistakes, okay, but it's better to learn from other people's mistakes, especially in the market. You better first learn from other people's mistakes, okay, because they have made those painful mistakes. They've lost a lot of money. So we are going to see, okay, what are those mistakes? We want to learn from them, okay. Okay, so we're going to see in the next two slides how people make mistakes, okay. Now, these two slides, some of you may have seen it before, but never mind. Top reasons why 90% of traders lose money, okay? Which means, what are the top reasons why 10% of the traders make money, okay? On the opposite is you see that way, right? So let me run through some of the reasons which may be quite familiar, okay? Number one is not knowing the difference between long-term investing and trading. Okay, now if you're investing for the long term, which is the Warren Buffett way of investing in, say, value stocks and all that, they hold it for long term, 5 years, 10 years, and all that. It's very different from trading a stock or a futures, especially in futures for the short term. Okay, so trading futures is short term in terms of if I trade palm oil, in fact myself, I trade intraday. I don't even hold my positions overnight, right? So my holding positions, most of my trade happens within the hour. I'm in or out by the hour. Okay, so I'm a very short term trader. Okay, so I don't invest long term. I only invest long term in stocks. Okay, so I buy value shares and I keep them. Okay, so you need to differentiate between what is long term investing and what is trading. Very, very different mentality. All right, so that is something that you need to know. Number two is underestimating risk and leverage, especially in futures trading. There's leverage. Okay, leverage is the ability to multiply your earnings very fast because you are using less capital to trade a very large position. Okay, but if you don't know how to use leverage, then this becomes very risky because leverage can work against you, right? So this is something that you need to know as well. Now, number three is very important to understand. The deception that trading is so simple. Okay, a lot of people last year made easy money. Okay, so they thought that making money in the markets is very simple. Okay, it's because they forget that it's luck. There's this element called luck. So don't treat luck as skill, because skill is something that you need to take time to develop. Okay, if you never ever read a book on trading, okay, and then you make this huge money in the market and you think you were good because you're good. Oh, I'm so good. No, I should be full-time trader. A lot of people conclude that way. They make money 6 months, then they say, oh, okay, this is my calling already. God gave me this gift and now I'm going to be a full-time trader. Okay, things are a lot more complex than that. Okay, so it's not so simple. Okay, so the deception of trading is, it can look so simple because trading is very simple, buy and sell, press one button, you're in already, right? So you make money, then you make 10 times in a row, then you think you're very good. Okay, so please do not be deceived that trading is very simple. Okay, which connects to number 4, which is no trading before training. No training before trading. You never train before. You never fight in the real ring before, a fighting ring. You think you can go there and beat everybody, right? So you need training. That means you need skills and you need knowledge. Okay. Number 5. Okay. So very important point. Starting undercapitalized. Okay. There's a lot of people selling on the internet how you can make use US 500 and turn it into 30,000-40,000, and after that turn it to 100,000. A lot of promises that way. Okay, but a lot of people start undercapitalized, or they use money that is not risk capital, which is very, very dangerous, which comes to number 6, right? Using money that is not truly risk capital. You cannot afford that risk and you took the risk into the market. Okay, we will talk about that because it's a very big impact on your trading psychology when you need to make money in the market, right? Because your money you put there, you actually need to make money. When you need to make money, I can guarantee you sure lose money. Okay, that's something I've learned the hard way. Okay, overconfidence is also the beginner's mistake. They thought that their luck made them good traders, which is not. Okay, number 8 is trading with your ego, wanting to be right. Okay, and instead of making money, you're so sure that this particular futures or this particular trend will continue. Okay, just like the palm oil trend, it was so strong, the last couple of weeks, and then in the last 1 week, things totally changed. Okay, so if you hold too strong a view is also a problem. Number 9, listening to other people's opinion. Okay, this where are my my buddies with the tips? All the buddies with the tips all disappeared already the last couple of months. Okay, so news, rumors, social media is also a problem. Okay, or those of you on social media, you get a lot of this a lot of different types of news. Okay, a lot of them unverified and unresearched ideas. Okay, so those are dangerous as well. So if you don't have a system that is your own and you know that system will work that is a problem. Okay, so listening to news, rumors, and social media chatter is not a professional trader's way of trading. Okay, trading for excitement, of course, that's the wrong reason. I think you should get excitement from something else less expensive than trading for excitement. All right. Okay, and another last 10 is lack of money management. We'll talk about that. No method. Okay, no method. Okay, just trade by luck, by tips. Okay, no trading rules or having trading rules that you won't follow. Okay, 14 is very important as well. Very unrealistic expectations of trading returns. Okay, sometimes you hit a good streak and you think that this streak can be consistent, but unfortunately, trading is about consistent. So if you have unrealistic returns expectations, then your trading could go into big problems when you are in a downturn or you're losing money. Right? You think, okay, I did that before. I've done 100%, 200%. I can do it again. That may not be the reality. Right? So over trading, both in size and frequency, that means you trade a lot, you trade too much, depending on your capital, you're overdoing it. All right. No discipline, no patience. These are two of the characteristics that will work against you when you're trading. And 18 is not serious. Trading as a hobby. Okay. Try some other hobby. Trading as a hobby is a lousy hobby. Okay. I can guarantee you it's a very expensive hobby. Okay. Trading as a hobby, you should trade like a business. Okay, and 19 without a plan, and then lastly, of course, trading with I feel using emotions to trade. Okay, so all these reasons are why 90% of traders lose money. Okay, and those successful traders, who 10% of those people that take the money from all these 90% of people do not use all these ideas, all these 20 ideas, right? So you can learn from these mistakes, as Warren Buffett had said, learn from these mistakes of these people. All right, so those are very important things that I want to start first, but let's go on now. So the question of whether part-time, full-time, and professional, what is the difference? A lot of people feel that, okay, if I succeed part-time making, say, 10,000, maybe I go full-time and can make 100,000. Okay, it may be true. It may be true. Okay, but actually part-time and full-time traders can both be successful as well. The most important distinction, actually, when you talk about full-time trading and part-time trading, is if you are a full-time trader, you are making a living from trading. Okay, that means every single cent to support your lifestyle comes from trading. Okay, and you must be able to do that because you don't have any other income source. All right, so is full-time trading actually better than part-time trading? Not necessary, because you have this problem of having the pressure of having to make that money. And that money, just like trading with capital that's not risk capital, you will have a problem because you have this psychological pressure. Okay, and this psychological pressure does not what do you call that, enhance your trading performance. Okay, so only if you can trade full-time, already have enough buffer, and we'll cover that about full-time trading, what is the setup, then only you go full-time, right? So there are a lot of advantages in part-time as well. In terms of capital and all that, you have a big advantage as well. right? So before everybody embarks on that ability to go full-time, you must ask yourself the question whether you are ready to do that or not, okay? Because being a professional trader doesn't mean that you are have to necessarily be full-time or part-time. Being a professional trader is basically you are treating your trading like a business. You're doing it very professionally, okay? You exhibit all the behaviors of successful traders. That is a big difference between professional trader, full-time and part-time. You need to understand those concepts, right? So full-time trader, again, another, a lot of times people say, oh, full-time trader are day traders, okay? Okay, I am a full-time trader. I do day trade, okay, but not in the sense that I'm stuck on the screen. I don't look at the screen all the day. In fact, I look at the screen for only like 10 minutes and that's it. I put in my order and that's it, done for the day, right? And later I just monitor the prices as well. So a lot of people have the illusion that full-time traders sit all day watching the screen. To me, I already went through that, okay? I've been that as well, watching the screen whole day. After I retired, I became a full-time trader. I did that, but unfortunately, I didn't like that. Okay, so I changed my strategy. Okay, but a lot of times it's promoted as a full-time trader style. Day trading is full-time. Okay, but I must tell you, day trading is you need to be at your top of your game. Okay? Because that's where you are on top of the pile. You can do day trading successfully. You are right there, being the top probably 5% or 2% of the traders in the world. Okay, because it's not easy. It's the toughest way of trading is day trading, because you have to react and make a lot of decisions. It's very tough on your trading psychology, because every hour or every half an hour you are making decisions. Okay, so there is pros and cons. Okay, but full-time traders are not necessarily day traders. Okay, full-time traders can be position traders as well. Okay, so don't get the illusion that, you know, if you want to be a full-time trader, you have to be a day trader or you have to be stuck on the screen. Okay, so if getting glued to a screen is your idea of a trading lifestyle, maybe you like it, but no, to me, I prefer a better lifestyle. Okay, so please differentiate between full-time day traders and day traders, not necessarily the same thing. Okay, but of course, you want to do full-time day trading, of course, you have to do full-time. No boss is going to let you day trade while you're working, right? Yeah, so let's move on. Okay, let's talk about the capital requirements. This is a very, very important subject. Okay, professional trading is a real business. Okay, so when you're doing business, you need to have capital, obviously, right? So you need to manage your trading business, okay, as a real business, and you need to consider capital. Okay, last time somebody I was talking to was talking about doing business in at that time it was good lah. You doing Chichongkai in Chinatown. You were doing business there. A small little space, something like what, 8 feet by 8 feet. You know how much it costs? It actually costs about $250,000. That space to do business, right? So to do Chichongkai business, also need at least 240,000, or rent it from the guy who owns the lot, right? So when it comes to trading, if you don't have capital, it's very susah one. Okay, why I say it's very susah? Okay, so let's say you have 10,000 ringgit, okay, and then you want to be a full-time trader. Okay, what do you expect? Are you expecting to make 5,000 every month with a 10,000 capital? Can it be done? Yes, it can be done if you're very good, okay? But most of the time, a lot of people fail to have realistic expectations of the return, okay? 10,000, you want to make 50% every month for the next 12 months. Well, you are either overrating yourself as a trader, because you are, you know, even the best fund managers or hedge fund managers can't do that. You can do that. So you don't have realistic sense of your own abilities. Okay, so capital is a very, very important thing. How much trading capital and to start is a very, very important consideration. Okay, especially you want to go full time. There's operational cost. What's your screen cost? What's your data cost? What's your space cost? Charting software, live data scripture. Is all these things you don't think about until you go full time. See, because all this will cost you every month. Okay, so it's very important to consider when going part time or full time. That's why a lot of time when people start trading, I would advise them to go part-time first, okay? While you have an income, or to make sure that you make a living, okay? Don't worry about your living expenses. Then you have your capital. You may not have enough of capital yet, okay? But you need to build the capital into such size that your trading part-time is so profitable that it can totally, replace your part-time income. If your part-time trading income can replace your full-time job income, then you are ready to go full-time. Okay, if you don't have that, you feel that after you've done moderately success in part-time trading and you want to full up and go full-time and hopefully to make 2 times 3 times more, that's a very dangerous, that's probably not advisable. Okay, so think of that very clearly before you go full-time. Okay, because you need full-time living expenses. Now you need to have reserves of at least 12 to 24 months before you can do that. Okay, and later I will tell you a story of Bill Williams. This is my hero. Bill Williams is my trading guru, American guy, and he was the one. He's the one that invented the indicators like alligator, the awesome oscillator, and he was a trader when he was doing that. And then he was very good in trading, but he was doing trading part-time. Okay, he was a therapist with the wife as well. Then they decided that they've got enough skills already. They came out and to become full-time traders. Okay, and for the first 1.5 years, they almost totally failed. They almost lost all the capital, right? So what was the difference? I know they were very successful trading part-time, and he was a brilliant guy. And then when he came out to do full-time, he almost failed. Okay, so one day, they were, after losing so much money, he and his wife went for a retreat, and the wife asked him, like that, we cannot go on like that. But the wife was very kind. She asked him this question. He said, Bill, do you love trading? Do you love trading? Of course, Bill said, I love trading. This is my life. I want to do it. Okay. So the wife told him, okay, you don't worry about living expenses. Okay. We still have enough to do it for 6 months to a year. Okay. You go and do your trading. Okay. If we all fail after 1 year, then we go back and become therapists. Okay. So you see, there's a big difference. You trading with that pressure or not. Okay. So of course, the end of the story is, of course, Bill made it to become a very good trader, and then he became a very good education and taught a lot of people about trading, right? So it's very, very different trading full-time and part-time. Okay, even people like Bill Williams, okay, who's got a fantastic system to trade. Okay, so this is something for your thought. Okay, Bill Williams' story is a true story. Okay, scared money and trading for milk money. That's what we're talking about. Okay, trading capital need to be risk capital that you can afford to lose. Even mentally, you're prepared to lose it all. Okay, if you're not mentally prepared to lose it all, it's not true risk capital. Okay, because fearful money is a guaranteed way to lose in trading. Okay, if you borrowed a lot of money and it's not your money for risk capital to trade, you are in trouble. Okay, you are in trouble. Okay, because you cannot answer that question, can you walk away from a loss? Because you can't afford a loss. Okay, and in trading, there will be periods of time where your system will have what we call a drawdown. Okay, you see this yellow box on the right. You have a drawdown, and all systems have drawdowns. What it means that it has this losing streak. Okay, so you must be able to bear that losing streak. Okay, if you cannot bear the losing streak, you got to pay off your loan or something, you don't have the cash flow, then yeah, you are in trouble, right? So be able to handle the losing streaks is a very, very important mental or a psychological strength that traders need to have, okay? Because everybody goes through that, right? And a lot of traders cannot afford to go through that, and they will fail as a trader. Okay, and most of the time it's the problem of undercapitalization, not enough capital, and wrong sizing of their trades. Too big, maybe they're trading themselves too big, right? So that's a very important thing about capital. Okay. Okay, so let's talk about the trading strategy and what are the ingredients of trading strategy. Okay, this slide, a lot of people are very familiar. If you're in trading, there are 3 things you need. Of course, you need a method, you need good money management and risk management, and you need good psychology. All right. So in terms of market analysis, everybody has their favorite analysis. Some people use economic data. Some people use candlesticks. A lot of different styles. Sacred geometry, chaos theory, which I use, MACD, ADX, Bollinger Bands. Oh, okay. All of these methods can work. Okay. But you need to know whether that method that you have has got an edge. Okay, that's what we're going to talk about. Does it have an edge? Right? Yeah. A lot of people can imagine that, wow, my MACD, I cut here, buy, wow, so beautiful, cut down here and sell. But long-term, can use not, you don't know. Okay, so you're just imagining in your mind or fantasizing that your MACD crossover strategy can work, or your Bollinger Band, or even your RSI, or your lunar cycle, or your whatever black box system can work. You're just imagining. Okay, if asked you to measure whether that can work or not, you don't know how to measure. So you basically don't know whether your thing can work or not. Okay, you're just imagining and fantasizing that you work. Okay, and when you're trading professionally, fantasies is it will remain fantasies lah. Hopefully it doesn't become a nightmare, right? So we are going to go in and show you how to know your edge. Okay, so when it comes to mechanics of trading, you have different ways. Okay, of course, methods of trading, some of you may be familiar. It's about analysis and identify when to go in and go out, where to put your risk management, and where to take profits. Okay, so in terms of trading approach, there are usually two types. Okay, one is called the discretionary approach. Okay, discretionary, what does it mean? That means that you can study a chart or study the fundamental data and all that. Okay, then based on your feel. Okay, when you hear yourself in your head say, okay, I look at this chart. Okay, I feel I can buy now. When you say I feel, it's called discretionary. What do you mean by discretionary? That means the decision is made by you, the trader. Then you say, hey, David, what are you talking about? Of course, all the decisions are made by me. I'm the trader, right? Correct. Okay, but contrast it with what we call a mechanical approach. Mechanical approach is called a rule-based. Your entries and your exits, it's very structured, it's very disciplined, there's no emotion. The decision is made by the method. Okay, so this is a very important distinction. A decision made by a trader and the decision made by a method. Okay, when you have a decision that's made by a method, it can be measured. Okay, when you have a method that's made by the trader by a feel, it may be very challenging to measure. Okay, and when it's very challenging to measure, most of the time you don't know what is your edge. You don't know whether your system boleh tak boleh one. Okay, you just have a hunch. Just like your trading system, your hunch is I feel. Okay, my MACD cut already. I feel can go in already. Okay, so that's disadvantage. Okay, so when it comes to measuring results, okay, the mechanical approach has an advantage because you can know your edge and you can measure your edge. Okay, unless your discretionary approach can be measured, you won't know your edge. Okay, so let's go in a bit about what is David talking about the edge. Okay, so the edge starts from something that a lot of traders don't do lah. That's tracking their numbers. They don't know their numbers. Okay, if I ask you the question, do you know the statistics of your method? Okay, if you don't know, that means you don't know your numbers. Okay, if you don't know your numbers, you don't know whether you will succeed or fail in trading. Okay, you are what? Basically trading blind. Okay, it's a bit like gambling already. I'm sorry to say that, but when you're doing that, you are taking a punt, you are speculating, you're gambling without any measure of whether you can succeed in the end. Okay, and most of the time I can tell you it normally doesn't lead anywhere. Okay, so if you are a professional trader, you need to know your statistics on. You know what's your win percentage, you know what's your drawdown, you know all those figures are in your hand now. If you don't know these figures, and I can tell you a lot of years I spent trading without doing that. Okay, so you're not only the ones that not doing, I wasn't doing that as well. I also thought my system, was very good. Sure lah, I look at it, I take profit 2 times more than my stop loss and all that. It should be okay one lah. Don't know one. Okay, it's only you have a feeling only. I'm also fantasizing. Okay, I was fantasizing for years. Okay, so without knowing my trading edge, you don't know. So when I went full time only, I realized I cannot continue to do this way. Okay, it's not professional. Okay, so I went in and I learned to calculate my edge. Okay, and also learn to know whether what is my risk of losing all my capital. Okay, this particular one, my risk of losing all my capital, I knew long time ago because I studied that long time ago. Okay, trading edge also actually I studied long time ago, but I didn't put to use only. Because why? Because a lot of people don't put the effort in tracking their numbers. Okay, if you don't write down your every single trade and analyze it, the already first sign that problem already. Okay, so to become a professional trader and to do things professionally, you need to keep track of all your trades. Okay, we will go into that a bit further afterwards. Okay, so these are the numbers lah. Testing and evaluating trading system, you need to have all these numbers. Okay, what's your net profit? What's the number of winners and losers? What's your win percentage? This is a very crucial measurement. Okay, and the win percentage is something that a lot of people on the internet sell you. Okay, they say the system is 80% accuracy, 90% accuracy, 70% accuracy, whatever accuracy claims they are making. They always what do you call that? Focus on this number. Okay, but this may not be the most important number. Okay, then you need to talk about what's your average win. You must know this figure. What's your average win? Every time you make a profit, what's your average dollar profit of all your winning trades? What's your average loss of every losing trade? That is a figure also you need to know. Okay, because with that, the average win and average loss, you need to calculate this very important, crucial measurement, which is the win-loss ratio or the profit ratio. Okay, without this figure, you cannot calculate your edge. Okay, then what's the average trade? That means what? This is also the called the expectancy as well. Okay, if your average trade is positive, then your expectancy is there. Okay, and expectancy is actually the measure of your edge. Okay, largest drawdown is how much from the top of your equity down to the lowest and back up. So that is a drawdown. Okay, and that's very important. You need to know also, by knowing the drawdown, you know how much capital you need to be able to survive trading this particular system. Okay, profit factor is basically used by people to measure the profitability, percentage time in drawdown. You also want to calculate, okay, average drawdown, what are average all drawdowns. Okay, but the first very, very important numbers are the first net profit, number of winners, winning percentage, average win, average loss, win-loss ratio. These are the top 6 measurements you need to have at your fingertips. Okay, and let's see how we're going to do that. Okay, but before we get to the edge, having the edge and expectancy, I want to talk to you about this risk of ruin. Okay, this picture, risk of ruin, I kept this article for a long time. This article, I think, came up in a long time, forgot already, by Balsara. I kept this thing at least since 1995 until now, this article. Okay, but the day I managed to find one copy on the internet. This is actually from Stock and Commodities Trader. It's a magazine. Okay, and Nelson Bazara was talking about the Nozer Bazara. I think it's Egyptian or something. Talking about the risk of ruin. Can you measure your system's risk of ruin? What do you mean by risk of ruin? Risk of ruin means that whether trading this particular system long term, will you go bankrupt or not? Okay, so basically the ROI measures whether your trading methodology is profitable in the long term. If you don't know this figure, also a problem. You trade 5 years, bankrupt. Okay, your system bankrupts you, or you cannot continue trading anymore. So it's a waste of time as well. So you need to measure this figure as well. Okay, so what is risk or ruin? I show you some of the what do you call it, charts. Okay, risk or ruin is basically a measure of whether your trading system will lead to success or destruction. Okay, it basically has 3 measures. Okay, number 1 is the probability of success. That means your trading system, what is the win percentage? Okay, critical measure. Number 2 is what is the payoff ratio? Okay, that means what's your average win divided by the average loss. Okay, that's very important. And the last one is the fraction of your capital exposed to trading. That means every time you trade, how much percentage of your capital is at risk. Okay, with these 3 things, you can determine whether the system will bankrupt you or not. Okay, so in terms of looking at the risk of ruin, a trader is said to be ruined if his equity deplete to a point that cannot trade, not enough for margins or whatever, he cannot trade anymore. Okay, and this measure is between 0 to 1. 1 means sure bankrupt. Okay, zero sure cannot bankrupt. Okay, anything in between is the risk of whether going either side of that particular extreme. Okay, so when you want to trade the system, make sure your risk of ruin is as close to zero or not zero. Okay, that means long term you have no chance to go bankrupt. Okay, in terms of your trading capital, right? So let's understand a bit more about risk and ruin. I hope I'm going at an okay pace and not too fast. Okay. Now, please put in your questions later. Okay, now let's look at this risk of ruin. And this 100%, what does 100% mean? Okay, 100% means that every time you trade all your capital, you risk everything. Okay, I hope nobody does that. Huh? Okay, only people do that on the gambling table sometimes. Okay, but okay, what is your risk of ruin? Okay, this is your probability of success. You can see over here, the column on the left running down. What does that mean? That means what is your win percentage? Okay, if your system is a 50-50 one, then it's a 0.5 measurement. That means it wins half the time and lose half the time. Okay, and then what is the payoff ratio? Payoff ratio is your average win against average loss. Okay, so in this illustration, it shows that if you risk 100% of your capital, okay, even if your probability of success is 60%, again, that's supposed to be quite good. And the payoff is 10 times. That means every time you make a profit, it's 10 times your loss. Okay, you still have a 40% chance of ruin, which is very high. Okay, so you see this rate figure here, 40%. Okay, where the two axes, what do you call that, meet, that is the risk of ruin percentage. Okay, so even with 10 times payoff and 60% win, if you risk everything at one time, 40% of the time you shall lose. Okay, that means 40% it cannot be a good figure because you sure hit this 40%. Okay, so let's move down to reducing the capital. Okay, now let's go to 50%. So now every time you trade, you risk 50% of the capital. Okay, it's still quite dangerous. You look at the figure again. If you have 60% success rate and then 2-to-1 risk ratio or payoff ratio, you still have about 21% risk of losing money. Still very, very high. It's not even close to zero. 20% is very high. Okay, so 50% you capital risk at one time on a trade, also not good. Let's go down lower. Let's go down to 25%. Okay, at 25%, you can see things are getting a bit different already. Now, why do we keep picking 60%? You may ask, hey, why don't you pick the better one? Why don't you pick the 80%? Okay, pick the 60%, because 60% is normally a good trading system will have a percentage of 60%. So all those systems that promise you 70%, 80%, 90%, most of the time, tak boleh pakai one. Honestly, if you ask me, tak boleh pakai lah. If boleh pakai one, he will keep it a secret. He will never tell you or never sell it on and never reveal to you. Okay, but according to the statistics of the top traders, most of the percentage, if your trading system is very good, it has a probability of success about 60%. It's considered very good. Okay, if you have anything slightly even above that, 65% or 70% is extremely good. Okay, so even at 60% and 4 times. That means 4 times payoff ratio. That means every time you make say 400 and you lose 100 ringgit. Okay, 4-to-1. It's still 0.27. Still 2.7%. Still not zero. You know. Okay, still not zero. Still got a chance to go bankrupt. Okay, so now let's reduce to 10%. Okay, the numbers now are a bit very different already. If we go to 60%, when you're risking 10%, if you go back to the 60% probability of success, you see that the risk of ruin has gone to zero. Okay, which means to say if there's a system that has 60% probability of making it and 2-to-1 ratio, you have a 0 chance of this system, if traded long term, will have a 0% chance of going bankrupt. Okay, but you cannot move up. If you move up to 45%, the chances of it will still have 3.3% risk over here. Okay, which is still not zero. Okay, so you can see from what I'm showing here is at the moment you slowly reduce your exposure to risk every time you trade. Let's say, for example, if you move it to 5%, then you're getting to 0 levels already. Okay, that's why in terms of when people say money management and position sizing, normally people will say that you do not risk more than 2 to 5% of your capital in every trade. Okay, that's the reason, because you want to avoid the ability of getting ruined. Okay, so even though you have got it down to lower part, you still need to know that in the upper parts, if your probability of success is no good, it's still, even at 10%, you can see if you have your payoff ratio is very important. This particular figure, payoff ratio, which is something that a lot of people don't reveal to you or disclose to you when they're selling trading system, is very important. Okay, the higher the payoff ratio, the lower you can go down on your probability of success. Okay, so that's a risk of ruin is something that, okay, so how to measure risk of ruin? There are a lot of calculators you can find on the internet. You use it. I didn't want to put it up here because it's quite complicated, the calculations, where you can input the three factors there, the three variables, which is the win percentage, payoff ratio, and the amount of capital risk. If you put that in and input in the calculator, you can get your risk of ruin. Okay, so very important to start with that, to test out your system whether the risk of ruin is zero. Okay, right, so we've covered risk of ruin. Okay, so this is a summary. Okay, it's about survival and good risk management. High win ratio is important, but not as equally important as payoff ratio. This is very important, payoff ratio. Okay, and later when we calculate the edge, we'll see payoff ratio as very important. Okay, I show this slide all the time, and I think a lot of people who have come to my seminar have seen this slide. Okay, I always say your optimal trading system needs to be simple. Simple wins away complexity, logical and rational, clear rules for exit, stop loss, exit and entry, and positive expectancy. And I think I've done this over so many times, but I've never explained what is positive expectancy. Yeah, so I've kept a secret there. Okay, which I've never explained to people. I said you need to have a positive expectancy, but I never told people how to measure a positive expectancy. So tonight I'm going to make right what I've never done so many times showing this particular slide. Okay, so I'm going to share with you what is expectancy. Okay, expectancy is your edge. If you don't have positive expectancy, you have no edge. Okay, so everybody who says that I'm trading with an edge, okay, the edge is the most critical thing in trading. If you don't have the edge, don't trade, you're a waste of time. Okay, and the edge is calculated by what we call positive expectancy. Okay, what is that? Expectancy is what you expect to earn on average for every dollar you risk in a trade. Okay, so every time you risk $1 in a trade, whether in the stocks or in futures or in palm oil or on that, if it comes up with a positive return, okay, that means a positive expectancy, then your system has an edge. Okay, the expectancy is large or small only. Of course, if you have a larger expectancy, then you have a more profitable trading system. Okay, but it's finding that positive figure. Okay, and there are 4 variables in this what do you call that calculation. Win percentage, actually win percentage and loss percentage, but basically win percentage is basically 1 minus the loss percentage, so I didn't put the loss percentage here. Then average win and average loss. Again, the same numbers that you saw for risk of ruin. Okay, so these 4 numbers in measuring the system is critical one. If you don't have these numbers, you can't even measure your edge. Okay, so okay, let's say, for example, you have those numbers, okay? Then you plug it into the model, and the model looks like that, okay? This what engine? I forgot what engine already, but never mind, don't worry about this picture. The formula is this, okay? E equals 1 plus W over L times P minus 1, which is a probability of winning trades. W is the average win amount. The average loss is L. Okay, so this particular W divided by L is actually the payoff ratio. Okay, and P is the winning percentage. Okay, so once you input those figures in, or alternatively, you can use this as well. This will come up with the same result. Okay, if you have a positive figure applying this particular formula, then your system boleh pakai. Okay, your system has an edge. Your system is going to be profitable, provided, okay, you have the proper position sizing, the risk of ruin. You really don't risk too much. Okay, so risk of ruin you have to count in first as well. So once you have positive expectancy, then you can apply position sizing, okay? If you use money management and position sizing on a system that has a negative expectancy, then what you're going to do, you're going to accelerate your loss and you will go into ruin faster. That means you become bankrupt faster because your system is negative expectancy. So if you apply a position sizing, you say, okay, every time I make a profit, I increase my exposure and all that. If you do that in a system that is negative expectancy, you will accelerate your loss. Okay, so you can only apply money management and position sizing in a system that has a positive expectancy. All right. Okay, this is jumping to the deep end, okay, but this deep end is very important for you to understand, okay? If you don't understand this, because you will waste a lot of time and effort in trading without knowing this, okay? But the formula is not difficult, okay? So let's jump to an example, okay? So here I have an example. This system has an average win of 2,000 when he makes money and average loss about 1,235. I think I extracted this from Brian Jones. Okay, and the percentage win is only 52%. That means it makes money only 52% of the time. Okay, so we plug all these figures into the formula. Okay, we plug it in and it comes out with 0.37 positive expectancy. What does this mean? It means that for every dollar you risk, you have the expectancy of making a return of 37 cents. Okay, for every time you risk $1, your system will give you back 37 cents. So it's a positive expectancy. Okay, so this system is going to work. All right. Okay, so let's see some other examples. Okay, let's look at this example. Some of you may have seen this in my other presentations. This is the RJ trading system. RJ is from this book called the Ryan Jones, The Trading Game. You can read. I highly recommend this book actually, Ryan Jones, The Trading Game, because this talks a lot about position sizing and money management. This is one of the best books on money management if you want to read. Okay, so do get it. Kinokuniya, I think, got not a cheap book, very expensive, almost like $300 for this book. Okay, but never mind, worth your time and worth your money. Okay, so from his book, he has this system that has come up with this kind of trades. So I'm basically just using his numbers to plug in. Okay, now what we want to see over here is this. Okay, let me show you what is the winning percentage. Okay, winning percentage of this whole system is 57%, which is actually quite good, right? We said that 60% is a very good number. The win-loss ratio is 2.8. It's very, very good, right? So in this blue box, okay, let's see what is a break-even system. What figures does it have? Break-even system has a win percentage of 50% and a win-loss ratio of 1:1. What does this mean? That means out of 10 trades, you win 5, lose 5, okay? And when you win 1, you lose 1, okay? This break-even system is only the broker will win because they make a brokerage from you. In the end, you trade this for 20 years or so, you won't make a single cent, you lose all the money in brokerage. Okay, good for RHB, but not good for you. All right, so don't use this break-even system. If you see your win percentage 50 and your win-loss ratio 1, don't waste time because you plug into the system, you show you long-term is the edge is 0. Okay, edge 0, that means you got no edge. Don't waste time. Okay, a very good system has a win percentage of 40 and a win-loss ratio of 2. Wow, okay. Good system or 40% only. Okay, so a lot of people look at it and say, hey, 40% and win ratio 2.0. Wow. Okay, so what is my system's numbers? My system's number is 39%, 39.7, I think, for my win percentage. And my win-loss ratio is actually better than 2. My win-loss ratio is 3.79. Okay, that means every time I made 3.7 times my losses. Okay, so I'm trading my system. I know my figures, and technically, as a statistic, is a very good system. Okay, now what is almost holy grail system? Okay, this is like almost made by this is the dream system. Dream system is 50% and win-loss ratio is 2.5. Wow, this is dream system already. But you forgot just now, we saw in Ryan Jones system, win system 57%, which is better than this one. And win-loss ratio is 2.8. Wow, even better than this. So Ryan Jones system, who is Ryan Jones? He must be damn good, right? To have this system. Now, the thing about this is a lot of times I've recommended this book to a lot of my friends, and a lot of people will say that I want to learn trading, I don't have a system yet. Okay, so I say, hey, why don't you go to this book, The Trading Game, and use the system? Okay, it's got a few variables X and Y that Ryan Jones didn't review, but you can always test that. You see, so a lot of people never did test because why? Because doing the numbers is a very tough thing. Okay, if you are serious about trading, you have done the numbers. I've given this assignment to a lot of people. I've seen a lot of people don't do it. I've seen a few people who do it. Those are the people are still in the market and still surviving. Okay. I also threw this challenge to my wife because she says she wants to learn trading. Are you willing to do the dirty work of doing backtesting and all that? She managed to do it. So she can also make it as a trader. Okay. So it's all about effort. Are you willing to do it now? If not willing to do it, then it's difficult. All right. So let's see whether I have time to calculate. I don't think I have time to go in to look at the calculator. But what I encourage you to do is go into internet and bring out the expectancy calculator, okay? And put in your numbers to see whether it's a positive number or not. If it's a positive number, then it's very, very good. All right? So let's move on because so backtesting and forward testing. This one I need to spend some time. You need to backtest your system. What is backtesting? That means if you have a strategy, you need to test out the entries and exits using past data. Okay, preferably 5 years or more to verify the viability and profitability of that system. Okay, this is a thing that a lot of people don't do as well. Okay, if without backtesting, you cannot get figures. Without figures, you cannot know your edge. Okay, as I always, you may say I'm very long-winded. Okay, but I went through the hard way. You shouldn't have to go through that hard way. I'll tell you straight, point you to that direct road. You need to backtest your system. Okay. After backtesting and having a viable system, then you need to forward test. What is forward test? So many tests. Paper trading. That means you need to paper trade it first. Okay. You are so daring. You want to put. Some people are very impatient. After backtest, they want to put real money already. In the end, also they find it didn't work. Okay, so forward testing is already also important because forward testing uses the system to test the actual results in the real life data. Okay, so that's very, very important, right? With backtesting and forward testing, you are able to keep what is a trading log. Okay, so trading log is all about all your trades you need to put down. Date of entry, what are the contracts, what's the size you bought or you sold, long or short, entry price, stop loss price, exit price, gross profit, brokerage, net profit per contract, maximum drawdown, blah, blah, blah. All these 50 to 100 trades. Okay, so you know now that professional trading, it's a lot of work. Okay, it's a lot of work. Yes, a lot of work. I tell you, it's worth it. Okay, if you really want to do it for real, like doing any real business, you need to be really serious about it. Okay. Okay. Money management rules. I just want to cover a bit on that. The first rule of money management is to preserve capital. So that's why we said in the risk of ruin, risk no more than 5%. Because if you go above 5%, then your risk of ruin will become more evident. Okay, it will increase from 0 to something of a positive number. A positive number in the ROR is not a good number. Okay, so you want to keep it as low or even at 0 if you can. Okay, calculate your win-loss ratio to aim for 2 or more. Okay, because with 2 or more and a 5% risk at any one time, your risk of ruin is very low. Okay, and then use position sizing. Okay, I don't have the time to expand today on position sizing. Basically, is increasing the size as your account grows and decreasing if it goes down. Use it only if you have the edge. If you don't have an edge in your trading, if you use position sizing, it's the fastest way to to lose money, right? So know that. Okay, so concentrate on risk management. Even this trader, Victor Neverhofer, is a trader for George Soros. He says even the time he spent 10 years with George Soros, he only talked about his losing trades. He never talked about his winning trades. Okay. In fact, a lot of people who are new in trading only talk about their biggest winners, never talk about the biggest losers. Okay. So you need to be very aware of risk when you're trading. Okay. So these are the 5 fundamental truths of trading. Number 1 is anything can happen. Okay. And because you have an edge, you know your system can work. You don't need to know what's going to happen next in order to make money. You just need to follow your system. Okay, why? Because let's say, for example, your system out of 10 trades, you will make 4 trades out of 10 or 40%. You know that in between that 10 trades, okay, you will make 4 trades and then your game plan will fall into place. Okay, but when it comes, when does the win come? You don't know. Out of these 10 trades, you don't know whether it's going to come at the beginning or come at the end. That means to say there's a random distribution between your wins and losses for any given variables that define your edge. So if your defined edge is between 10 to 20 trades, you don't know when the wins will come in this 10 to 20 trades. Okay, that's what it means by random distribution. Okay, so an edge is nothing more than the indication of the higher probability of one thing happening over the other. So you have the edge, that means in the long term, in the long run, okay, your system will win. All right. So every moment in the market is unique. It's never the same as the previous one. So we don't judge every single moment. We see as the market comes and trade our system as the market comes. All right. So this is the 5 fundamental truths of trading. And you can get this, you can expound it. If you like to read the book, the source is from here. Okay. At the bottom, you can see Trading in the Zone. Okay. This is by Mark Douglas talking about the trading psychology. It's a highly recommended book, which I recommend to read as well. Okay, so next is trading psychology. If there's anything to say about trading psychology, it's just these words lah. Get out of your own way. Get away. Your system will work if you don't spoil it. Okay, and that's what I learned the hard way. Even I design my system using AI. Sometimes also the David Lowe in me will get in the way. Okay, the system has already got the edge, but he gets in the way. So the key thing, if you want to know about trading psychology, is just this word: get out of your own way. Okay, that is only if you have a winning trading system. Okay, if you don't have a winning trading system, you have the best trading psychology in the world. It's also useless, because you don't have an edge, you should die one. Okay, so that's one thing a lot of people talk about trading psychology being the key. Yes, I understand, it's the key. Only if you have a method that can win. Your method cannot win one, losing one. You, no matter how powerful you are in your mind, also you will lose. Okay, so you cannot imagine your system, you cannot will your system to win, because the system engages with the market and engages with the reality of trading. Okay, so in terms of psychology, just get out of the way. Okay, don't disturb your system. That's basically the key to actually trading psychology. Okay, so these are the mindsets I just quickly go through. We don't have time for that. Okay, number one is take responsibility for own decision and outcomes. Of course, as a trader, right, you need to take responsibility. You cannot blame the market, or you blame the exchange, or you blame your broker, or you blame the system. A lot of people do that. Okay, the other thing is going the flow. That means as the market comes, you accept what the market flow is and you trade along with the flow. Okay, understand that the market is not the threat. And the market is not out there to kill you. He's got no feeling. He doesn't know even you are in the market. Okay, unless you're so big. Okay, trade without fear, because you know you have the edge. Okay, understand that the probabilities of your edge. Okay, and see the markets objectively. Okay, don't see markets emotionally. Okay, so those are the mindsets of successful trader by Mark Douglas as well in his book. Okay, so let's move down. Okay, so ask yourself this question: are you ready for full time? Okay, so the question is, you need to be able to replace your income from trading while still in a full-time job. So if you are in a full-time job and you now can replace your income with trading, then you're ready. Okay, so you have already proven that your system works. You already built 12-month reserve fund. Okay, just like Bill Williams. His wife say, okay, you go and trade. Whatever happens, you go and trade for 12 months. If you don't make it, go back to your job. Okay, but if you go back to your boss after firing him, you find a different boss. Don't go back to the same boss, because you sacked him already. But you cannot go back to him. He will not accept it. Okay, so your reserve funds is the separate from your trading capital. Okay, your reserve funds for living expenses. Okay, it's not your trading capital. It's different. That's why trading full time, you require more capital. Okay, having this safety margin is the most important plan when you're trading full time. Okay, so have a backup plan like Bill Williams. He can go back to become a therapist. Okay, so some of you may be thinking, okay, I got this 12-month reserve, let me try it. If I can't make it, then I'll do something else. Possibly, okay, you're going to do that. Okay, So professional trading setups, what do you need in terms of trading setups? You need a couple of things. Of course, trade and execution screens and platforms. You can see RHB provides those as well, trade execution platforms. And a lot of charting software are integrated with these trading execution screens, okay? A lot of it already inside. You don't need to buy a new charting software because they are together. When you sign up with your futures broker and they give you a trading execution platform, normally the charting software is in there as well, right? The part about strategy testing and forward testing software, okay, you may need something for doing that, okay? For me, I personally use for my execution and my charting software, and sometimes so using for forward testing is I use TradingView. Okay, TradingView has a paper trading, what do you call that, software and platform where you can forward test my strategies. Okay, of course you will need to have a brokerage account. Okay, if you want all these benefits, a lot of brokers provide that. RHB is one of the main broker that can provide you, but of course you need to open an account with them. So, and I encourage you, if you want to have this or you don't already have one, okay, you open a futures trading account and you get access to this trading execution platforms. Okay, connectivity comes together, of course, with your platform, and market access also comes with your connectivity to the trading system. Okay, so in terms of workspace, PC monitor setups, of course, you will need these basic things. Okay, which is actually in these days is very, very convenient. A lot of the platforms you can already execute using your mobile platform or even your laptops, right? So last one mentioned is Bursa Malaysia Derivatives program. Once you're ready to do full-time, there is a program called the Locals Participants Program, okay? And this is basically a professional derivatives trader. You trade on your own account. You join as a participant of Bursa Malaysia Derivatives. You are called local, okay? And you locals are deemed professionals, okay? So they trade on their own prop account. You're not allowed to take clients, okay? You cannot take clients to trade on behalf of them, okay? And with this locals program, you actually enjoy a very special exchange fee and clearing fee. So it's a lot cheaper, but your minimum volume is 1,000. So if you cannot trade above 1,000, I think no point thinking about that also. You need to be number one, you need to be successful and profitable. Number two, you need to be able to trade that volume as well. Okay, but bear in mind, if you are full-time professional, then you will LHDN will see you as gaining all your profits from full-time trading, and it's also taxable. Okay, so there are pros and cons. You trade as a retail trader now, part-time, there is no, the income tax doesn't come and find you because capital gains tax at the moment is not taxable. Okay, so being a local and professional trader, if you trade full-time also, you need to consider the tax angle as well. All right, so I think I am done. Okay, I will pass back the platform to Shane for question and answers.
All right, thank you so much, David. And that is a very mind-blown session, from David. If you feel the same like me, type 1. Okay, if you feel that it is a mind-blown session to you, type 1. Okay, let me know.
Thank you, guys.
Okay.
Triple one some more. Thank you very much.
Okay, wow.
Questions.
Okay, now we are actually running a bit low of time. So let me just address some of the questions that we already have on the panel. So the first question from Abdul Musin Yaakob is that, can I open 2 or more futures trading account with RHB? So I can do day trading for one account and the other account for position trading. Vincent, would you want to take that?
Yes, to answer the question, basically we can actually separate it by using a sub account. So it can be done, but you don't need to open 2 accounts unless you have got the accounts are of different names. Yeah.
Okay. The next question is by Mohammad Asmar Weir. Do I need separate account to trade spread trading for SCPO than using normal future trading account?
Okay, you can use the same account to trade spread trading. So you don't need a different account to trade spreads.
Okay. Now, in reference to TradingView that David you just mentioned, are there any FCPO and FKI price charts?
Oh, yes. When you are subscribed to TradingView, the monthly charge for real-time data from Bursa, I think it's only $1. It's very cheap. So if you have TradingView, do subscribe for the data. It's anyway, it's very cheap, like four ringgit a month, right?
All right. So one Huzaini like to ask, can I trade via TradingView using RHB account?
Yes, if that question is, I do that, and that's how I trade. My account is tagged to CQG, okay, because TradingView is an external. You need to track to the CQG account, okay, and I trade through the CQG gateway of RHB.
Okay. Kian Lee would like to ask, like, David, do you recommend spread trading, FCPO spread trading? If yes, please explain a bit how to do setup for spread.
Okay, spread trading is a strategy. Although I don't personally use it, I think it's a good strategy because it's a strategy that has a reduced risk profile, and then the returns are very good as well. Okay, so if you learn to trade spread trading from the proper people, or you know how to do that successfully already, I will encourage you to pursue along those lines, because I think it's very, very good way of trading, with little risk in terms of the absolute movement of the what you call that of the price. Okay, it's not without risk. Okay, because you see some of the spreads go crazy as well sometimes, but you need to watch those risks as well in terms of spread. But it's a good way to trade. And although I can't specifically advise you on spread trading because I don't do it myself when I trade, but it's a very good strategy to look at as well.
Yeah, it can generate a lot of volume. So if you need volume to become an LP, right, local participant, then spread trading is one of the easier way for you to reach the target.
Correct.
All right. Okay, now for retailers, right, what are the most simple and effective technical indicators to use? That is by Chin Fan.
Okay, Chin Fan, thanks for that question. Trading indicators are actually very personal, so it depends on how you develop the system. My personal favorites are developed by Bill Williams, Alligator, what do you call that? The Awesome Oscillator. I found them very useful. So if you want to venture into looking at Bill Williams trading system and his indicators, those are a good way to start. Okay, yeah, my system now, I don't even use indicators. Okay, I use price action. So it depends. Okay, so indicators are something very personal. It depends on how you develop your system and what you use as the ingredients. So some may use indicators. I don't. Okay, I use price action and patterns. You can test it out. Okay, the most important thing is whatever indicators are, even no indicators, you need to back test and forward test. Okay, that's the key.
Okay, now the following question is targeted to Vincent. So what QTS version RHB is using by Adrian Tan?
You mean the QST?
I think it refers to QST.
Yeah, obviously we do have upgraded versions of QST. Every time the developer has a upgraded version, then we will also give it to upgrade our systems versions and give it to our clients.
All right. The next question is also targeted to Vincent. Okay. I have an interest to become dual licensed remisier for equity and futures at RHB IB. So my question is, can I trade stock and FCPO if I myself is a remisier?
Okay, that's a trick question. Maybe I will have to take this offline. Please contact me.
Okay. So Ahmad Hafizuddin, all right? Please contact Vincent privately. I think he left his contact numbers, contact emails, okay, at the slide just now. All right. Hang on, yeah. So can you ask, like, David, you mentioned before that you like to use 1 hour time frame. Can you share what is the preferred profit target for 1 hour and also the stop loss strategy?
Okay, the 1 hour is my favorite time frame because it gives me what do you call that, smoother signals. Okay, in terms of the indicators and the patterns that I use. Now, in terms of the cut loss and profit, it depends on the ATR, because you see the palm oil now is trading very volatile. So if I need to adjust looking at the ATR as well. Okay, if the average true range is very large, then my stop loss may be a bit larger. But of course, correspondingly, the profit target will be higher. Okay, so for my aim in terms of looking at the using the 1 hour charts, okay, because now when I'm trading, I don't use indicators anymore. So in terms of Bill Williams system, when I was using it, I look at the ATR and look at not to exceed 2 ATRs for my stop loss. Okay, normally a good guideline is 2 ATRs for that particular time frame as your stop loss. Okay, so you check back the ATR and see how much and whether that particular risk is what do you call that, comfortable to you. So sometimes the hourly charts may not become comfortable because the risk becomes very big already. So you may have to go down to the 30 minutes charts. Okay, so the risk and reward, you need to adjust it according to the volatility of the market.
Okay.
I hope that helps you.
All right. So Lian Sang like to ask, as far as I know, most elite traders are discretionary traders. It is a bit contradicting with your opinion. Would you like to elaborate more?
Okay. It depends on what you mean by discretionary trader. Okay. A lot of times discretionary trader are contrasted against what do you call that, funds who manage their funds passively. So another term for discretionary trader is basically you call your shots lah. Okay. So you can call your shots either by the method of looking at the chart and then a decision is made by the trader, or you can also be a discretionary trader using a methodology. That means you have a trading system, a very mechanical trading system. So a discretionary trader also can utilize that method. So it depends on how you define it. Okay. I hope that
All right.
answers the question. Yeah.
So I guess that concludes our session today. So thank you so much for everyone for coming into this session. I hope that you have gained enormous value out of this webinar. I think today's session is very insightful and also very mathematically and statistically driven. So I guess you all are doing all right with all this math, and most importantly, know your system. Okay, what we learned from David is know your system,
Know your numbers, yeah.
know your numbers, and be willing and committed to do the dirty work yourself. Okay, then you'll be whether you can consider trading futures as a full time, and if you're ready, whether to try it part time or try it full time, you can consider RHB, because RHB has one of the is one of the top futures brokers that are serving retail clients nationwide. They have the most number of branches nationwide to support you. All right. So if you want to open an account with RHB, you can leave your contacts in the survey form. Then RHB will arrange the friendly futures broker representative to cater to your needs to open an account. All right. So without further ado, let me tell you how you can win the 100 ringgit touch and go e-wallet voucher. All right. So just give me a minute. Okay, so we have concluded the Q&A. So thank you so much for the very engaging session. All right, so last but not least, which is our post-webinar survey. So what you need to do to be a lucky winner of this Touch and Go e-wallet reader pin is to answer all our survey questionnaires after this webinar. So the questionnaires will be launched after this webinar and will also be sent to you via email. All right, so there are two ways. Once after you exit this webinar, you quickly fill up all the quite few questions that we have prepared for you, and then or if you miss that, then you can do it in the follow-up email that we send to you tomorrow. So if you do that, then we'll pick 3 lucky respondents and then to send it to you the Touch and Go e-wallet reader pin worth 100 ringgit. So it will be sent to you. The lucky winners will be reached out within 2 weeks. So that's how you can win for this Touch and Go. So not only this webinar is made free for you, but also we give away some prizes to incentivize those people who help us with our survey. So thank you so much to our guest speakers, Vincent Chin, who is the Associate Director of RHB Investment Bank, and also David Low, who is the Managing Partner of Xmodius Trading PLT. All right. So with that, thank you everybody for coming to this webinar. Hope that you have gained a lot of value out of this, and hope that to see you all trading futures successfully in the future. All right. So have a great pleasant rest of the day, and goodbye, everybody.
Goodbye.
Goodbye. Thank you.
Thanks, Vincent. Thanks, David.
Thank
Thanks,
you.
Bursa. Thanks, RHB.
Thank you.
All right.
Thanks, Bursa Malaysia. Thanks, Shay.